Good morning, traders. Thanks for joining me this morning. It's 8:01 a.m. Chicago time on the 25th of October 2021. It is Monday. Happy Monday. Hopefully you had a great weekend. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Today, this is episode number 2101. As we dive into the pre-market summary sheet here, thank you for the sound check. We have a market that is in a neutral position here, which is actually turning slightly or mildly risk on. This the sheet was done at 7:50 Central, 8:50 Eastern, and things have been moving up a little bit in some of these issues. Europe's higher this morning with the DAX leading up 45 points. Crude oil has breached $85. Unbelievable. $85. Remember, crude has had a $125 swing from that big drop last April. Well, there was not enough storage, and you were paid to take on crude at $40 a barrel. Now it's up 85. It's up to $85 and is trending higher, not backing off at all. Crypto, we have Bitcoin at 63,000, and Ether still hovering around 42,000. They haven't done much since the pop last week on the ETF that was released. And in terms of the earnings, we're looking at some key players: Lennox, Kimberly-Clark, and Otis, all releasing. Lennox missing by 6.5%. Otis worldwide beating by 5.48%. Remember, I am simply filtering out any company that is below $3 billion in estimated revenue. After the close, however, we do have Facebook, Universal Health, Logitech, and Crown Holdings. The big thing that's on deck today is earnings, continued earnings. We're going to get a whole lot of them this week. We're going to get let's see, Microsoft, Twitter, and Alphabet. On Tuesday, Apple and Amazon are expected to report later in the week. For the week, given that it's a Monday, this morning the IFO business climate came in pretty strong, in line actually with consensus. Nothing major tomorrow, but on Wednesday, let me turn down my news feeds here. But on Wednesday, Germany gets its GfK consumer confidence. Great Britain gets the autumn budget. At the same time, we had U.S. durable goods orders, Bank of Japan rate decision. Also on Wednesday, Thursday, the German inflation rate, U.S. GDP growth, Q on Q, advanced. And then on Friday, we get consumer confidence out of Japan, inflation rate out of the EU, and personal income and spending out of the U.S. That's what's on deck for this week. The S&P, pretty light trading here. 134,000 contracts traded. Inventories 42% long, meaning that 42% of the volume at price is trading above the prior settle. The high is 45.46. The low 45.46 and a quarter. The low is 45.2250. Point of control at 45.4250. We attempted to push back into that 45.50, which was rejected on Friday. We'll go over that in a minute, and came off. The rotations up here, again, this is important stuff up here. The rotations have fallen off. Volatility's coming off just slightly. But the S&P went from 7.5 points as a standard rotation on a 1-minute bar chart, going back 252 days to 20 sessions. It went from 7.5 to 7. The NASDAQ, I think, went from 31 to 28 and so on. We're seeing, except for crude oil, we're seeing rotations dropping as volatility gets sapped out. Today, nothing major. We do have BOE speech occurring currently in Dallas Fed. Very, very light day today, and that's where we stand. Looking at what was expected on Friday. Friday, the main expectation, and I talked about this quite a bit in the context behind it, is we expect the market to push higher, reject, and then I was looking for it to get down into the 14-15 area. First test at 25, and it could push as high up as 50 before falling off. Now, you know, I did trade this scenario, and I did get stopped out getting short early. Looked like it stalled out, and it continued. So I got a stop out there, and it's just part of the business. But we see we see this thing open, test down, and squeeze up. We don't see a lot of delta on the squeeze higher, so we expect it to give in a little bit, and then it ultimately got to 51.50, and then it went down to the 25 right here for that little chop point, and then it pushed to 15. So we did get a combination of scenario 2 and scenario 1. We hit the 50. We hit the 25, we hit the 15, and that was the anticipated play. And then the market finally pushes up. The S&P finally pushes up through this area, which is expected to be some pretty steadfast resistance. We do have a range extension down. The initial balance low at 33.75. We had both VWAPs in the 34.50 area. We had both mids in the 34-35 area. We had there was just so much going on there. The open in that area as well, looking for a short. The short didn't yield very much here. Consolidates and then finally pushes through the prior session through Thursday's high again to finish basically completely in balance. So we end up with settlement around 45.36.50. In what is basically a day that opened almost exactly where it closed. It opened at 36 and it finished at 36 and a quarter, and it settled at 36.50. So it was a day that was basically just going sideways. The delta for most of the session was negative. This was expected. And it was a tough trade from the point where it started to push through this confluence right here of lines. You can see these lines all coming together right here. From that point, it became really tough to see what it wants to do next. Here's what happened since. This is a 30-minute. We came right off on the open. The expectation was, as I was doing my homework and sharing my thoughts last night, the expectation is it's likely to start to squeeze lower a little bit. Didn't quite get there. I said, given the action, I might read that it has stalled and may retest 45.11 again and back to 4,500 from above. Given the posture of the market, this is what I expected us to be coming into today, but it doesn't look very weak. We have a P-shaped profile here. This is a short covering, and we are shifting the point of control higher, it looks like. So we're expecting value higher, even though we're inside of Friday's range. So I'm expecting a relatively choppy and contested open. We're opening right on top of the overnight point of control. We have some separation from the VWAP. We have some separation from the mid, the full session mid down here. We may see a move early on, but I'm expecting it to be a little bit whipsawy, and the calendar doesn't show us that there's a lot to cover. Here's what the overall, the big picture is. This is the composite chart, which is made up of RTH sessions, RTH being the equity session, 9:30 to 4 p.m. Eastern. Each bar represents that, and you could see that even though on Friday we poked below the prior low, it did not really hold that price. So we did not have a neutral day, but we had excess in the top, excess in the bottom, and we are holding above the prior close. We're holding above the mid. It's looking bullish. We're pushing up against all-time highs. The all-time high in RTH is 5150. The all-time high in extended trading hours is the same. And so to me, this does not scream get short. Although it looked like it on Saturday night, I think, when I did my homework, or Sunday morning, I don't remember. Time is a blur at this age. It looked like it may be stalling out, creating a rounded top, attempting to create a rounded top. But that rounded top, if I trade off of that information, essentially I am projecting what I want to see or think I should see. We don't want to do that. We want to trade what we actually see. And what we actually see is this is quite bullish. We're maintaining above that 45.25 that we tested on Friday. And this is a bullish open. So that's where that stands. We have the weekly one-time framing. These boxes are the week. Okay. One-time framing is higher. The daily one-time framing could resume to be higher. It's been higher all week. So to me, the weaker side is the sell side. So take that into account and remember not to fight the market. Here's what the overall picture is on Edge Pro X. You can get Edge Pro X. You can get this platform at edgeprox.com. We still have really big separation between the beginning of the month VWAP and the current action. Gold is really starting to trend higher. I don't know if it's behaving like an inflation edge or if this is a seasonality or whatever. I'm not trading gold. But gold was hugging its VWAP pretty much most of September, has separated and has come down to hug the VWAP again, and now it's separating again. And I'm not sure if this is going to drop again, but when gold rises, this gets attention. Same with silver. Silver has been steadily opening the gap between the VWAP and its current pricing. The bonds selling off a little bit today, but not by much. The 10-year has been quite weak. Yields have been higher. The euro has come back towards its VWAP, and then the cable is starting to move towards its VWAP and pull back a little bit, and the Swiss franc is remaining strong. The Japanese yen has been running away from its VWAP, weakening against the dollar, and is pulling back a little bit. So we got to keep an eye on yields here, is what I'm gathering from this. We got to keep an eye on yields and make sure that that doesn't come and play back in the picture. So I want to bring back this fundraiser. It has until Sunday for us to raise another $708 to get to $5,000. We blew through the $2,500. I think we were too modest with our expectation for this fundraiser. We blew through the $2,500 in just about a day after announcing it. So we wanted to see if we can push for $42.92 to raise money that goes directly to St. Jude's Children's Hospital to support children's cancer research and treatment, to help families with a child with cancer to offset some of their costs and to help them get the treatment that they want. Please contribute. The link is below, scrolling there. Go to ct.pro/FT71-fundraise. This was done for my birthday, which was earlier in this month. and it ends this Sunday. Sunday's the last day. Please take a moment, contribute whatever. You're a cup of coffee, a sandwich, $10, an Uber ride, $25, whatever you can. Please contribute. Let's get to the 5,000 before we get to the end of the week. Okay? Let's take a look at what's expected for today in our planning segment here. Here we go. Charts ready, locked and loaded. For the primary scenario, inventory being 45% positive isn't really, or 41%, 45% negative isn't really too offsetting, but the expectation is that we are likely to open and chop against this point of control. I'm anticipating an early drop, which is what we've been doing. When we've been in a bull, we've been pulling back, looking for an early drop back towards the settle. Settle is right here. If you recall, 36.50, 36.50. Looking for it to drop towards there, chop around, and then I'm expecting it to tackle the 45.50 again and then start to push even farther. If we get to 36.50, we're pretty much open to get to the 62, 63 measured move target before we come back. That'll be scenario one. That's almost 30 points of range. Pretty unlikely in a bull market like this, but it may grind its way higher. It may stall out at 45.55 right here. This is the 55. May stall out right here and turn around. Not sure, but this is all-time highs. It's anybody's guess. It's a guess. It's really a guess. There's nothing to lean against. The secondary open auction that pushes the overnight high at 45.46, squeezes through the 51, makes the 55, consolidates, tries for the 55 again, and then we get an impulse, and this will be the indication to start looking to go short into the settlement price. If I can get the settlement price on a short from up there, from somewhere around 46, 47, 50, that would be a solid trade. This is back to settlement, poke through a little bit, and then balance out for the rest of the session. Really, this is the kind of environment where you're pushing all-time highs, so there are no historical references. There's nothing to read off of in the past. So really, we're guessing. When we get to new all-time highs, all we're doing as traders is guessing how much money is left that has not been committed that will enter the market at these prices. Because everybody else that's committed got us here. We got here because there was a commitment from someone. And so to push new all-time highs means there's more cash sitting on the sidelines. And the thing is with these companies is they have been raising prices and demand hasn't fallen off. A lot of major, especially the big techs, have full coffers, huge amounts of cash sitting on the sidelines. Why would they buy their stock back at these high prices? Relatively high, I should say. Not sure, but that's what it takes. It takes new cash, and that's the only kind of cash that we cannot measure. So we can measure what has happened. We can see the volume. We can see the trades come across the tape, so it's known. Those things are known, right? What we don't know is what's called the third force, or the unknown party, which is the money that's sitting on the sidelines that may get deployed in the market. And that can come in the form of call options that market makers might be short on, and then they go and buy the stock, so it doesn't matter what the price is. They'll still buy the stock to hedge those call options if there's enough demand for call options. So it's a murky thing to be at all-time highs. It is a time when I'm backing off a little bit and I'm waiting for the market to develop some information within the session. So let the market set up within the session and then use that information that we just got, in the first 15, 20 minutes to gauge the sentiment and which way the market might go. That's my best advice to you at all-time highs. Hopefully you will consider it, and you will be conservative with your risk. In the meantime, if you're bored, don't forget to contribute to this, okay? Give us a little boost and get us into 5,000. Good luck, and I'll catch you tomorrow morning. Take care.